All right, everybody, we're back. My name is JJ. You're watching Bull, Boom, Bear Bust, also known as BX4. Let's go ahead and get right into the financial economic news so you can stay ahead of the financial curve. And let's get started right here. Home prices. One of the reasons why home prices are staying elevated, there's many. If you look at the banking system, but one that I don't think anyone is talking about is the destruction of supply, meaning homes being destroyed. Deadly tornado, flooding, and rain, swollen rivers plagued residents in the path of Debbie. That's the latest tropical storm, hurricane. Well, combination of a lot of things: tornadoes, hurricanes, and this is over in North and South Carolina. So the Carolinas getting pummeled, and we've seen this. We've seen this big uptick in severe weather, destroying hundreds, sometimes thousands of homes at a time, and it's keeping the cost of building materials elevated. In fact, let's go over to lumber chart, a lumber price chart right here, and this goes back 10 years. Before 2020, we saw lumber hovering around 300. It got as low as what, 260, in the middle of 2020. Even before that, though, it was in the mid to high 200s. Now we've been hovering above 500. Now, of course, it spiked coming out of the health crisis. There, it spiked up to what, 1,600, came back down, but we're still above $500, folks. This is something that I don't think very many people, if any, are even talking about. And if we're not going to see a decline in lumber costs, our home rebuilding costs really going to get that much cheaper, even if there isn't much demand out there with sales being near all-time lows right now in the housing market. It's not going to really matter if rebuilding materials, including the cost to build new homes, remains elevated. It may change a little bit because of the overall debt levels amongst consumers and so many consumers being priced out of the market. But this is another inflationary force, folks, and it's one of the reasons why I forecasted here many years ago that we would not see this housing bubble go bust. Now, of course, there's a huge part of it too that we talk about here quite often, and that's the banking system. Investors buying homes, in some states buying half of all homes, big mega companies, corporations, investment firms buying these homes. They borrow money at rock bottom rates. They buy up as many homes as possible. They turn around and charge enormous rents. That's another ingredient to the high rents and why rents are not really coming down. We also have the lending landscape with banks loaning out all kinds of money they don't have, with emergency measures still in place since 2020 that banks don't have to have any money and they can loan out an infinite amount of money. And then if people default, or if you have too many people defaulting, it's okay because we're just going to create the money, add it to the debt, and rescue all the banks, right? You see how this works, folks? And it's simple to see. I mean, people are still scratching their head today. I see people down in comments, why haven't home prices went down? This is unsustainable. This is impossible. It's not impossible. It actually makes perfect sense when you look at all the different factors that are put in here. The government buying most of the mortgages now. The government, again, can unlimited purchasing power. The U.S. government, they can just borrow endless amounts of money. 35 trillion in debt right now. You think they can't add on another 35 trillion? Right? Is there a limit? No, there's no limit. And people still are having a hard time figuring that out. I don't understand why so many people are still confused and not able to put two and two together. I think most of you do. But in general, I still see a lot of people out there confused, predicting a home price to crash. Many well-known people, famous people, wealthy people predicting a crash. It hasn't happened, folks. And it's because of the reasons that we lay out here. So hopefully, you'll spread the word and get more people to understand this. So factor the lending slash banking landscape in with the high rebuilding cost of homes. In this case, we're looking at lumber prices. And folks, it's pretty easy to see what's going on here. So danger ahead, danger Will Robinson, because we're not going to see a price crash unless something big comes in and pulls the rug out of this entire banking system. What would that be, folks? That would be something major. We're talking World War III. We're talking a grid down scenario. We've already got Klaus out there telling us to prepare for a major blackout type cyber situation. And I've been telling people here to prepare for that. We did see a glitch. It's been 3 weeks, a month ago now, maybe 3 weeks, that we saw a glitch take down a lot of systems here in the U.S. Airports, planes were stuck in the air. It was chaos. Imagine if that would have remained, if that outage would have remained for weeks or even months, right? Could you imagine the chaos here in the U.S. if that were to continue? All right, let's move on here. Got some other information I want to get into today. And speaking of weather risks, this article came out here talking about 12 hidden housing markets with low extreme weather risk. So they're mostly in the Midwest and not many tornadoes or hurricanes, zero hurricanes in these places. But would you want to live in any of these places? Actually, I used to live in one of them. Let's bring them up here. Okay, we've got Appleton, Wisconsin, Ann Arbor, Michigan. A lot of snow in these states, by the way. Columbus, Ohio, Kalamazoo, Michigan. That's where I used to live. Went to college there. Springfield, Missouri, Fort Wayne, Indiana, South Bend, Indiana, Toledo, Ohio, Akron, Ohio, Dayton, Ohio, Canton, Ohio, Rockford, Illinois. So it's all in those states in the Midwest. Really, it's more east part of the U.S. if you just look at the map. But Ohio, Michigan, Indiana, one in Illinois. Not a bad place to live. I'm from that area. I'm from Michigan. But you have to go to those states to where you don't see extreme weather risk like the hurricanes. But actually, you get some tornadoes in there. I remember having a couple of tornado scares back when I lived in Michigan. Not very often, but I did have some. Recent bank failures. Actually, not so much failures, but banks shutting doors. Major U.S. banks shut down 33 branches in just 2 weeks. 2 weeks, we're seeing a lot of banks close branches, and it's causing people now that are basically stuck. They can't make ends meet, or they can't even operate now without a bank because most people need a bank to pay their bills. Hardly anyone uses cash anymore. So you see what's happening here, folks? They get people herded into this digital online banking system where hardly anyone even uses cash, and then they start shutting down branches. Right, more people doing things online. That's a part of it, but you can see it's a big trap. What about somebody that has to go to a branch to deposit checks, whatever? Maybe they have a business. Many businesses not even accepting checks anymore because the checks may bounce. They're just swiping credit cards, and even businesses not accepting cash in some cases. But 33 branches closing in just 2 weeks. Well, it's going to continue. We've seen it over the past few years, but things are not changing. Whatever's causing this is not changing. National banks closed more than 30 branches in just 2 weeks last month. Chase, Bank of America, PNC, and other national banks collectively closed 33 branches between July 14th and July 28th. Bank of America led the way, shuttering 11 branches, followed by Chase and PNC. And the population group that this affects the most is older people, elderly people, people that don't get online, that never set up an email address. Maybe their grandson helped them set up an email address and they never use it. But either way, the elderly people that rely on these branches that don't use online banking, they're the ones that are going to be in this banking desert. You've heard of food deserts where there's no grocery stores. Well, there's now more and more banking deserts with no branches to go to for these people. All right, let's shift gears a little bit here. Let's talk about Costco, one of the favorite retailers for many people, a lot of people's favorite retailers. And it's very popular. We're not seeing many branches close. In fact, they're opening up more branches. These are just a list of some of the recent ones here, just in the past few months here at their site here. So huge retailer. Of course, everybody knows Costco, but they're now going to require you to scan your card going into the store to help prevent theft. Now, you already have to scan your card when you check out at Costco, when you go to pay for your items. But the people that are stealing stuff, they don't go through the checkouts usually, right? So now you're going to be required to scan your card going into the Costco locations. Costco makes a membership change. Some shoppers, usually you hold up your card, they just look at it. Now you're actually going to have to scan it to see if it's current. So were people going in with expired cards, and were they, taking things, were they shoplifting? That's what it looks like here. But something interesting as far as Costco stock, we saw August 5th, stock took a bit of a drop. It was 822. August 5th, it dropped down to 801, so a bit of a decline. But since then, it actually went up to even higher than it was August 5th. We're back up to what, 854 now. 854 as of the last close, which was the close of the market today, August 9th. We did see the peak, though, in Costco stock, peaked out at about 884 a couple months ago. Actually, just last month in July. So will that be the peak, or before we go on to new all-time highs in Costco. That's a pretty expensive stock. I wouldn't want to own it right now. With the things I think that we're going to see unfold here in the next few months. Shifting gears a little bit here, we've got more signs of consumer slowdown. We've got Paramount Global cutting 15% of its global workforce. Paramount Global CEO confirmed the long expected layoffs hitting the company, saying the media company plans to cut its US based workforce by 15%. Speaking on the company's second quarter earnings call, we're seeing basically a slowdown in consumers uh, paying money for these optional TV programming apps. And there can only be so many. And people are being more selective, more choosy. It's kind of like the fast food thing happening right now with McDonald's, Starbucks reporting declining profits, other stores as well, and many stores closing completely. Look at all the big lots closing down. So signs are here, folks. The writing's on the wall. How quickly will all this unfold? Will we see a rug pull before the natural decline in the economy because of the overall indebtedness of the U.S. consumer? As always, going to keep an eye on it here. Keep stacking, everybody. Let me know what you think about all this news today down in comments. Back to the beginning, what we talked about, the severe weather, the hurricanes, the lumber price is still above $500. What's the proper terminology for the lumber prices here? And by the way, I've even seen so-called lumber experts online saying prices were going to crash. Folks, it's not going to happen. Lumber prices above $510 per thousand board feet. That's the proper way to say it. But even people that are supposedly experts in that, many people that I've watched said these prices are going to crash because the demand is dropping. I hope they crash, but I don't see it happening with the weather, folks, and all the destruction out there. Let me know about all this down in the comments, everybody. As always, keep stacking big love. Bye for now. Peace.